position itself as a game changer for the India's financial landscape, offering a globally competitive platform for our business to thrive. Direct listing at GIFT City provides the Indian companies to unprecedented access to international capital markets, which is enhancing their global presence and enabling seamless financial integration. This initiative of the GIFT City reflects the India's commitment to fostering our innovation and creating a robust financial ecosystem that aligns with the global standards. So, in the today's session, we will explore the immense potential of the direct listing at the GIFT City, which will shed light on the opportunities it represents for the businesses and the transformative impact it promises for the India's economy. Now, in the today's discussion, we will dwell into the myriad opportunities that direct listing at the GIFT City offers, from enabling companies to raise the capital efficiently to providing investors with the access to diverse and high quality assets. We will also explore the challenges and the chart a roadmap to ensure the success of this transformative initiative. So, with this, today I would like to introduce our today's speakers. First one is Mr. Shubham Goyal, and along with the Shubham sir, we have the Akash Boddeda. So, if I want to introduce the Shubham Goyal sir, Shubham Goyal sir is the Assistant General Manager at the International Financial Services Centers Authority, which is known as the IFSCA. Shubham Goyal sir is a chartered accountant with the extensive experience across all private and public sectors. His professional journey includes foundation roles in audit and taxation with the leading consultancy firm, including Big Four. Key contribution as an assistant director at the Department of Economics Affairs, Ministry of the Finance, where he worked on various infrastructure policy initiatives like viability gap funding scheme. Current leadership, he is now current leadership at the IFSCA, where he oversees regulation and supervision of market infrastructure institution in IFSC. Notably, Mr. Shubham Goyal has been instrumental in projects such as the International Bullion Exchange, GIFT Nifty Connect, and the framework for the direct listing of equity shares of the Indian companies. So, with this, I would like to welcome CA Shubham Goyal for this webinar. Now, along with the CA Shubham Goyal, we have the Akash Boddeda. So, Akash Boddeda is the Assistant Manager at the International Financial Service Centers Authority. Mr. Akash Boddeda brings a unique blend of technical expertise and the regulatory insight to his role at IFSCA. As a part of Department of the Capital Markets, he majorly focuses on the primary listings and has contributed significantly to developing policies for the direct listing, enabling REITs. REIT is nothing but the real estate investment technologies, and IN invites at the GIFT IFSC. So, Akash sir, I would like to know about that investors ITs. What is meant by that? So, we will look forward for that in our webinar. Akash Boddeda sir is also overseeing the policy and registration processes for the capital market intermediaries, including the credit rating agencies. So, before joining IFSCA, Mr. Akash Boddeda gained industry experience with the General Motors and Mahindra & Mahindra. He holds a BTech degree in mechanical engineering from the IIT Guwahati, reflecting his strong analytical and problem-solving skills. Together, Mr. Goyal and Mr. Boddeda will provide invaluable insights into the today's webinar, into the strategy, opportunities, and prospectus of the direct listing at the GIFT City. So, let us all welcome them to share their expertise and vision. So, Shubham sir and Akash sir, over to you.
So thank you, Sagarji, for the introduction. So just one thing which I would like to add here, because now I'm addressing the CMAs. So
Yep,
I am a member of Indian Cost Account Service. So I'm an officer of 2017 batch. So this is a specific central civil services only for the chartered accountants and cost accountants. So I had joined Department of Economic Affairs as a member of Indian Cost Account Service, and I worked there for 4 years till August 2020. Then I came here to IFSC on deputation. Now I'm a permanent employee of IFSC and have resigned from Cost Account Service. So because this is a platform for the CMA, so I would like all of you to know that there is a service which is specifically for the CAs and cost accountants. Most of you should know. If not, then this is something which you can tell to your fraternity. And recruitment is also happening like once in 2 years, or maybe sometimes on annual basis as well. I think recently also the exam has been conducted for around 36 professionals. So that is something which you can spread across your fraternity. So now I'm not a
Yep,
member
sure.
of this, but I
Sure,
joined
sir.
Ministry of Finance, member of ICOS, Indian Cost Account Service.
Yep. It is great to know, sir, and it is our pleasure to have us for the today's webinar. So, and definitely this is our start. So, all the members and all of us will get connected in future as well for all those opportunities, all those things. So, now over to you.
Okay, so I'll start my session in two parts. So I think second session Akash will take over. So in the first session, I will tell about the GIFT and GIFT IFSC. So what actually the GIFT is and how GIFT IFSC has been enabled in this country, and how this serves as a separate jurisdiction, what kind of opportunities it brings into, and then we will enter into the specific part of the direct listing. So I'll just share my screen here.
Sure, sir. Definitely.
So is the screen visible?
Yeah, that is visible.
So this is the structure of the GIFT City, where you can see that GIFT City has been actually divided into the two parts. One is the domestic tariff area, which is like very similar to our domestic parts of India. Another one is SEG. So I think all of us are aware about the SEG. But what actually GIFT IFSC is? So this is a specific structure in the SEG which has been designated for a financial services. So this is actually nothing. IFSC is nothing but a financial SEG. So you know that there are number of benefits which are available to the SEGs in India. This is a specific SEG which was designated for the financial services, and the aim of the same was to enable a regulatory environment which can suit to the financial services. This regulatory environment will be similar to the financial services environment which is available in the global jurisdictions. So whenever you visit the GIFT City, you would find that there is a kind of smart city in form of GIFT City, but there would be a check post which you have to enter through to enter into the IFSC, which is International Financial Services Center. Till now, there has been only one IFSC which is there in the GIFT City, known as GIFT IFSC. So how did this GIFT IFSA concept came into the picture? So I think all of you guys must have heard that our honorable Prime Minister, who was then Chief Minister of Gujarat, he had once visited to the Singapore. And what he noticed that there is so many India-centric businesses which are being conducted from the Singapore. And the reasons for that was there were some tax incentives which are available to those financial businesses in Singapore. There was a kind of best-in-class regulatory ecosystem. So he noticed that there are the Indians doing the business of India, but they are doing the business from Singapore. They are doing the business from Hong Kong. They are doing these kind of business from various international financial services centers. So he wanted to create a jurisdictions in India which will be similar to the Singapore or Hong Kong. So in terms of regulations, in terms of benefits which can be provided to the financial industry. So at that point of time, he had this idea, and in 2015, when this idea had to be incorporated in India, so RBI had issued a regulation in 2015. So what actually these regulations were? So RBI had issued a regulation called FEM IFSC regulations, Foreign Exchange Management IFSC regulations. In those regulations, they said that whatever the entity which would be there in IFSC and which is been appropriately licensed by any regulator. So like earlier there were 4 regulators. So that entity will be considered as PROY, person resident outside India. So I think most of you guys would have heard about this is an offshore jurisdiction. This is an international jurisdiction. So the reason of being called this is an international jurisdiction is the entities here in IFSC are considered as PROI from the perspective of FEMA. I think all of you are tax professionals, so you would know about these things that entities in IFSC are not having the non-residential status under the Income Tax Act. So these are being called non-resident only under the FEMA. So that is the one thing which you always need to keep in mind. Regulation 3, I think this is what is being shown on the screen. You can see that financial institution or even a branch of financial institution, if this is in IFSC or has been licensed, it will be considered as a PROI. Now there are some, like I was talking about, some of the benefits, some of the exemptions which are there for the entities here. So I will start with the Companies Act. So all of us are aware about the Companies Act structure and all those things. So you can see that there are number of companies in IFSC. The number of sections are not applicable on those companies. So this was done with an intent that because sometimes you would see foreign companies to say that India's Companies Act structure is quite stringent. The tax laws are quite difficult to follow, and sometimes they follow all those kind of restrictions from the regulators, also from the government. So government had come out with two notifications, one in 2015 and another one in 2017. So the notification of 2017, it exempts certain sections of Companies Act on the public unlisted companies which are there in the GIFT IFSC. So I've listed out some important sections which are not applicable in IFSC. So you can see section 135, corporate social. These are some specific sections which I have listed out here. So like section 135, so everybody knows about as the corporate social responsibility. So this is applicable for all the companies in India, that they have to spend 2% of net profits of the average net profits of the financial year. So the class of companies, whichever is there in the Companies Act rules. So irrespective of whatever has been written in the rules for issued under the Companies Act, if the company is incorporated in IFSC, all these sections are not applicable. You can see the section related to the audit committee, CSR committee, sections related to the independent directors, sections related to the remuneration to the directors. All these sections are not applicable. So the intent behind all this was, so there would be number of companies which will be registered in different capacities with the regulators. So the respective regulations can prescribe the corporate governance requirement rather than it flowing through from the Companies Act. So, you would see the number of regulations which IFSC has issued. IFSC has prescribed the government governance norms as per their suitability of the business. So that's why these kind of sections have been exempted in the IFSC. So these are some important ones. I will also share the notifications with you guys, so you can see what are the kind of sections and subsections which are not applicable to the public companies and private companies which are incorporated in IFSC. So this is all about IFSCA. So like Sagarji had mentioned that I belong to IFSCA. So in 2015 when IFSC was created, so this jurisdiction was being regulated by 4 domestic financial sector regulators like RBI, SEBI, PFRD and IRDAI. So these are the regulators which regulate the financial services in India. In IFSC, because this is an offshore jurisdictions carved out under FEMA, these regulators are regulating the services. Again, I will take the example of Singapore. So like there is a regulatory authority called MAS, Monetary Authority of Singapore. If you will see the functions of MAS, MAS plays the functions of RBI, SEBI and IRDAI in Singapore. So MAS is the central bank, MAS is the banking regulator, MAS is the regulator for the securities market and other financial services. The similar concept, government of India also wanted to introduce. They took this, they saw Singapore, they saw Japan. Japan is also like that. FSA Japan is also a unified regulator. So they wanted to establish a unified regulator, and they passed an IFSCA Act 2019. So IFSCA was established as a unified regulator for the financial products, services, and institutions in IFSCA. If you read the IFSCA Act, so because a unified regulator has been set up, but the financial services are different. So government wanted to enable IFSC as a regulator, which will have the powers of all the 4 domestic regulators, but only under one umbrella. So I'll just deep dive into the IFSC Act so that you will come to know that how IFSC has been empowered with the powers of all regulators under the different acts. So these are some experts from the IFSC Act. The definition of authority. Authority is basically the IFSCA, International Financial Services Centers Authority, which has been established in 2020. The IFSC was established, and IFSC has been entrusted with the roles of development and regulation of financial products, services, and institutions. So I've just given here the definitions of financial products, services, and institutions. So if you'll see the financial products, it covers the securities, contracts of insurance, deposits, credit arrangements. So basically what SEBI regulates the securities, IRDAI regulates the insurance, and deposits, credit arrangements, this deposits and loans facilities are being regulated by RBI, because the RBI regulates the banks. So all these are put into the financial products. But because the scope of IFSCA, government wanted to broaden the scope of IFSCA so that IFSCA can regulate some of the products which are even not being regulated in domestic jurisdiction. So if you can see financial product, point number 6, any other product or instrument that may be notified by central government. So if you'll see today, we speak about bullion exchange, we speak about the universities here in IFSC, we speak about the global in-house center, global capability centers. So government has notified bullion depository receipts, aircraft leasing, all these instruments by way of notification. They were not covered in the earlier 5 points. So government has come out with the notifications from 2020 or 24, different notifications in which they have notified the financial products, and the institutions which are dealing in those financial products, they become financial institutions automatically. So this is the constitution of the authority. There would be a chairperson. So our chairperson is Mr. K. Rajaraman, who is an IAS officer of Tamil Nadu cadre of 1989 batch. And then you can have the members from all the 4 domestic regulators and 2 members from the government. So we are having a member from DEA and DFS, Department of Economic Affairs and Department of Financial Services. And there could be the 2 other whole-time members. So these are the powers and functions. So IFSC derives its power from Section 13. So like I was saying that a unified regulator was established, but the powers of all the 4 domestic regulators was to be given. Now what government did, government inserted Section 13 in IFSCA Act, in which they said that we will insert a schedule, we will insert the name of the regulator, we will insert the names of that under which all the regulators are exercising their powers. So government identified 14 to 15 acts, 14 acts in which the domestic regulators are exercising their power. So you could see the first schedule of the IFSCA Act. So there are around 7 acts under which RBI exercising its power for the regulation of financial services. And accordingly, SEBI, securities laws, ADI, and PFRDA. So government inserted that schedule and stated in the act that the powers which all those regulators were exercising under those 14 acts, those powers will be exercised by IFSC as far as it is concerned to IFSC. So these are the list of the acts. Schedule 1, you can see under the RBI Act, Banking Regulations Act, DICDC Act, CIC Act, GSAC, TSS Act. Under SEBI, all the security law, SCRA, SEBI, and Depositories Act. Similarly, ADI and PFRD. So I think now you guys are able to understand what IFSC is and what IFSCA is, and how IFSC has got the powers of all the 4 domestic regulators, and how IFSC has been established as a unified regulator. Now we will understand more about the IFSC. What is the status of the entities which are there in the IFSC from the FEMA point of view, from the Companies Act point of view, from the taxation point of view, from the other laws point of view. So like I had already said, the entities here in IFSC has status of a PRY only under FEMA, but not in any other act. So like FEMA, if you will say rest of the world, it is an offshore non-resident. If a person who is situated outside India, they will be considered as an offshore. PRO status will be with them. In IFSC also, they will be considered as an offshore non-resident. But the people from India will be offshore resident in FEMA. In terms of currency here, there are 15 currency which we have in IFSC, but not the Indian rupee. So there are the 15 foreign currencies which have regulations which are here, but not in Indian rupees. In terms of tax, so like I had told you that under the tax also you have got the status of resident, but under the income tax there have been so many amendments which have been made to provide the tax incentives to the entities. One of the most important one about the tax holiday. So the entities which are being covered in IFSC, they have got the benefit of 10 out of 15 years on their business income. So for the 10 consecutive years out of the 15 years, they do not have to pay any kind of tax.
We request everyone to please switch off their mic. We are getting disturbance.
Deepa ma'am, just there are 2 members. Could you just mute their set so other will not get disturbed? Yes, sir. We'll do that. Thank you.
Hello, sir. Kela, mute me.
Okay. So this is about some unique features about the GIFT IFSC, because it's an international jurisdiction. Only 15 currencies are there which have been permitted, attractive tax regime, and unified regulator. So I think this is all we have covered in terms of this, and there's a very good support of Government of India from the policy front. So that is why we have been able to take it forward. Now this is all about the regulatory architecture. Like I told you that IFSCA came in only in 2020. In those 4.5 years, we have been able to come out with our regulatory architecture for different sectors. You can see that there are a number of regulations which are applicable to the banking. These are applicable to the capital markets and for insurance. But you can see in this slide, there are a number of regulations which are not there for all these 3 sectors. You can see bullion exchange regulations. So like I had told you that BDRs are notified as a financial products, and bullion exchange automatically became the financial institution, and IFSCA got the power to regulate the bullion exchange, which was never there in India. So the aim of this bullion exchange was, because India is like a second largest importer of the gold and importer and consumer of the gold, but India was not playing any role in the price discovery. So for that purpose, bullion exchange was established so that the number of global players can participate in bullion exchange and under the regulated environment, because gold has been kind of an unregulated instrument which has been being governed just by some kind of RBI policies. But in IFSCA, bullion exchange has been set up under the regulatory aegis of IFSCA. Similarly, you can see aircraft leasing, You can see fintech entities. You can see the GCC, Global Corporate Centers, then foreign universities. So these are some unregulated institutions in India which are being regulated in IFSCA. And again, the important thing which is to note here, all of them can claim the tax exemption for 10 out of 15 years under Section 80 LA. So business income of all those institutions are exempt if they are set up on IFSC. This is in terms of the business highlights of the GIFT IFSC. So like, because you can see the exchanges here, there would be the banking institutions, there would be the insurance companies, there would be the fund management entity. So like you can see, these are the business highlights. There are around 700 entities which have been registered by IFSC till September. The turnover on IFSC exchanges, like Sagarji had initially spoken about the Nifty products which were earlier being traded on the SGX, Singapore exchange, because all those products have been brought into the NICIX, and all the global players are participating on NICIX. So monthly turnover has crossed around $100 billion. So every month, $100 billion of trade are being traded on the stock exchanges in IFSC. If you will compare only one index, Nifty 50, which is being majorly traded in GIFT IFSC, the turnovers in Nifty futures would be around 1.5 times of whatever is being traded in the domestic exchanges. So this itself tells about the success of the this product. And just one thing, like when I was saying about the GIFT IFSC and all, so we always say onshoring the offshore. This has been the mandate of this jurisdiction, because the India-centric business which is being done outside India, so the intent was to bring back to the India. So like GIFT Nifty, which was being traded by which was being traded on SGX, the product of India, it has been brought back to the onshore under the international jurisdiction in GIFT, and now you can see the success of that product. So it actually shows that onshoring the offshore, the mandate of GIFT, is actually being successful in these kind of things. Now I think you can see the key entities in the GIFT IFSC. You can see the number of foreign banks. Around 13 foreign banks are there in the banking ecosystem, including Stancy, HSBC, Citi, DBS, ANZ. So these banks have set up the shops in IFSC. They are doing their business from GIFT. The business of the Indian banks, which they were doing from their overseas branches, again, onshoring the offshore, that kind of business has also been shifted to the GIFT. There are around 15 Indian banks, 14 foreign banks, 30 banking units in the GIFT IFSC. In terms of funds, I think this is the most successful story in IFSC. Around 200 fund management industry FMEs have been licensed here, 150 schemes, and most of the vehicles which were there in the Singapore and Mauritius, they are being shifted here. And these are the funds are having very attractive tax regime. So I'll try to focus into that, some of the tax advantages which I am aware of. Service provider, this is also one of the I think this is something which will be of very much interest for you. Ancillary service provider, so the CA firms, law firms, all these kind of entities can also set up their offices. They can provide their services to the non-residents or the residents who are willing to set up their own offices in IFSC. But these ancillary service provider can provide their services only to the entities which are engaged in financial services like BFSI, we say banking, capital markets, and insurance. And there are some other entities in form of global capability centers. In ancillary, I think there is an expansion of that in terms of BATF regulations. So that also I will share it with Sagarji so that he can circulate amongst members. So these BATF regulations are about bookkeeping, accounting, taxation, and financial crime services. So I spoke about ancillary. In ancillary, you could provide the services only to the BFSI sector, like banking, financial services, insurance, and capital markets. In terms of BATF, you can provide the services to any other sector. So these would be the CA firms and all, but the service would be only bookkeeping, accounting, taxation, and financial crime, not other than that. And this business should be a new business being provided to the non-residents, not the old business which is being bifurcated here. So that kind of the new business, you can set up a new entity here. And you can provide your audit services to the non-residents if you are having a new contract, and you can claim the tax benefit under 80 years. So this is about the tax regime. So the first one about 10 out of 15 years of tax holiday. MAT rate is only 9%. And if you are opting for a new regime, then MAT is also not applicable. There is no GST. So this GST benefit is coming because IFSC is also a SEZ. So any kind of export of services to IFSC would be considered as export of services. So if there is any unit in IFSC which is procuring the goods or services from the domestic India, it becomes an export, and zero-rated services would be there. There is no STT on the stock exchange in GIFT IFSC. So that is also one of the advantages. There is no capital gains tax if the non-residents are trading on the products of stock exchanges in IFSC. So that is also one of the big advantages. And the fourth one, I think one of the most important for the capital markets, withholding tax of 9% on interest paid on the debt instrument. So the bonds which are listed on the exchange in IFSC, if there's interest is being paid to the non-residents, withholding tax rate is 9% in comparison to which is there in 20%, 15% to 10% in India as per the tax treaties. There are some incentives under the Gujarat ITS policy also if the institutions are being set up in GIFT. So I think they get some kind of capex support and operational support. There is some kind of reimbursement of employers' PF contribution also. This is the new project of single window IT system. So I think some of you would be engaged in applying the applications with the SEBI and RBI. So you must have assisted some of the entities which want to take the registration with SEBI in terms of their application process by helping them out in their compliance process. So I think all of you know that the process sometimes becomes quite cumbersome because there are a number of rules, number of regulations, number of application forms, and it becomes quite difficult for the professional to understand the nuances of that. So IFSC has come out with a single window IT system where you can apply the SEZ approval, some NOC requirements from the domestic regulator, so the IFSC registration. Even they have also connected the APIs with the GST. So you can just file one application. Your application will go for the SEZ approval for registration vertical in IFSC, also to the GST. So this kind of single window IT system has been been live and it has been working since 2-3 months. And applicants have to just come on one portal after incorporating the entity, and they can take all the licenses which are required to operate in IFSC. So this is a brief overview of the business verticals, which I will just quickly go through so that we can come on our topic of direct listing. So this is the banking sector. I think I told you about the foreign banks and Indian banks which are having the presence in IFSC. And these are the banking services which these are kind of entities are providing. Residents are also taking the ECBs from them, external commercial borrowings from the IFSC entity. About the fund entities, so this has been like quite a successful in IFSC. Here we are regulating the fund management entities. So there are 3 kinds of fund management entities: registered FME retail sector, registered FME non-retail sector, and authorized FME. So as per the classification of FME, the different kind of requirements are there. So this has been there in our fund management regulations, which are being reviewed at this point of time, and you can see the amended regulations. So I would share the necessary links with Sagaji so that he can circulate amongst all of you members to go through our regulations and circulars. So these are some big funds you can see in this slides, which are there for the fund ecosystem. Some big names like RDA, Abu Dhabi Investment Authority, Morgan Stanley, and all those names. Now, specifically about the capital markets ecosystem. So this I'll cover in much more detail, because for the direct listing thing, this is something which you guys need to understand. So like you are having NSE and BSE in India. So NSE and BSE, both of them have set up their subsidiaries in IFSC. So these are known as NSE International Exchange and India International Exchange. So both of them are the subsidiaries of NSE and BSE and working as an international exchange in IFSC since 6-7 years. And both of them are having their clearing corporation. So NSE is having the tie-up with the NSE International Clearing, which is known as NICCL, and India NX is having tie-up with India ICC. Like in India, you are having 2 depositories in form of CDSL and NSDL. Here there is one depository, which is acting as an international depository. This depository is called as India International Depository IFSC Limited, and this is actually being owned by all the 5 MIH. MIH, I mean market infrastructure institutions. So in India, MIH, if I talk about, that would be NSE, BSE, MCX, NSDL, CDSL. So all those 5 are having the stake in IDI. They have formed a holding company in IFSC called as India International Bullion Holding Company, and that company is holding the stake in India International Depository. So this depository is working as a depository for securities markets as well as bullion market also. So there is a unified depository in IFSC. And there are more than 125 capital markets intermediaries in terms of broker dealers, clearing members, depository participants, investment advisors, bankers, custodians, credit rating agencies, debenture trustees, because all those are required for the purpose of capital markets ecosystem. Then there are the products which are available on the IFSC exchanges, like GIFT Nifty, like we all spoke about. So equity index derivatives are there, currency derivatives are also there, some of the commodity derivatives. Then depository receipts are also there. There is a secondary listing of Dr. Reddy's ADR, American depository receipts, and also there are the unsponsored depository receipts of US stocks. So like somebody in India wants to trade in the US stocks.
बरं आलं तुमचं या महिन्यात आलं सर्टिफिकेट.
Sorry?
हा आवाज येतोय का?
Sima, could you just mute yourself?
So there are the
Yes, sir. Go
unsponsored,
ahead. Yes,
unsponsored
sir. You
deposit
can go ahead.
of US attacks, US stocks. So if there is a resident who wants to invest into the US stocks like Tesla, Microsoft, Apple, or Alpha, so at this point of time in India, this is being done through some unregulated platforms which are not being regulated. In IFSC or NSE-IX, unsponsored depository receipts of US stocks are available for trading. Even one stock of like Alpha or Tesla, it is being divided into the 50 to 200 depository receipts. So you don't have to pay the amount to buy like a one Tesla share. It is a fractional share which you can buy by investing through the depository receipts. And it is under the regulatory ambit of IFSCA being traded on NSE-IX. It will be in your demat account, which will be opened with the India International Depository IFSC Limited. And the corporate bonds, like quite successful, we are having around listing of around more than $65 billion of bond. So this is about the Gift Connect. So this is a project in which I have been personally involved. And initially, I think Sagarji had spoken about this Gift Nifty Connect, which was being traded in Singapore earlier.
Can I ask a question? If
yes,
it's okay
please.
for
Yes.
you?
Yes, exactly.
This investment by Indians in the stocks of foreign companies through the Gift City, of course, is a very attractive feature.
Yes.
Is it available to all of us? That means I'm a resident Indian. So if I have to invest into the stocks of any of these entities, how can I do it through the Gift City? Thank you.
Okay, so basically, what is there? NSE-IX has a product called unsponsored depository receipts, which I had covered, which I had just spoken about. So they have selected top 50 companies of US. So they will cover all the companies like Berkshire, Hathaway, Alpha, Tesla, Microsoft, and all these companies. So these shares are bought by a market maker there, and these shares are held with the custodians in IFSC, and those depository assets are being traded on NSE-IX. If a resident individual wants to buy those stocks, those stocks of the EDRs, so they have to open an account with the broker in IFSC. They'll have to transfer the money from the Indian bank account to the broker's account in IFSC, or they can also open the account with the IBO here. So both the options are available. So the rupees will be converted into the dollars, and with those Indian rupees, which has been converted into dollars, the UDRs can be bought. So then you can trade those UDRs. You can take the advantages of the fluctuations which are happening in the US. So with your Indian rupee, you can take the exposure of the US stocks, but this investment would be under the LRS, Liberalized Remittance Scheme of RBI. There would be a limit of $250,000 per year.
Residents can invest via LRS route.
Any other question?
Sir, I have the question regarding the
No,
same. As you said that, sir, go ahead.
yeah, no, if I buy the shares of Tesla, by opening an account through the Gift City intermediary, will I be entitled to all the rights as a common shareholders, or I will not have those rights? That's number
Yes,
one. And
yes.
number two, is there any threshold, for opening this account with the intermediary in the Gift City for being able to invest outside India?
So the first thing is, because these depository receipts are representing the equity shares which are being held by the custodian, so you are entitled for all kind of corporate action benefits, including the dividends and all. Even those UDRs are unsponsored. Voting rights are also there in case of UDRs. So you get all kind of benefits which are available for the common shareholder, including the corporate actions. In terms of threshold, you can open the account with the broker even for buying a 1 DRs of Tesla. There is no such threshold. But generally, what happens that you have to transfer some money, and there is some kind of remittance cost involved in terms of conversion from rupee to dollar and the remittance charges. So generally, it becomes viable only when you transfer some significant amount rather than transferring some $5 or $10. So it makes some sense. Okay, so if you are transferring some $5,000, $10,000, and you are interested in to invest in those kind of US stocks.
Yes, absolutely. Yeah. Okay, thank you so much. Thank you. I'm going to be there on 11th of this month attending a full day program. So I'm sure would also be very happy to open this account when I'm there.
Yes,
in,
yes,
in
yes.
Gift
So I
City?
think you can visit the website of NSE International Exchange. So they
Oh,
have given the full process there. So then they have listed out the brokers which are active in this space. So you can reach out to them. You can open their account so that you can also trade in under the regulated environment. So in India, there are some fintech platforms which provide these services, but that is an unregulated platform. Those shares are not in your demat account. Here, those
right.
shares, those DRs will be in your demat account. So you will have the ownership of those DRs.
Right.
So
Thank you so
when
much.
is
Thank you.
the
Thank you.
program and what is the all about the program? If anybody can highlight,
Sorry.
when is the program that recent member has mentioned, and what is that program?
I think they mentioned 11th of January, if I'm not sure.
Yes, they
That's
mentioned.
yeah, that's a program which is organized by International Fiscal Association
Okay.
in Gift City, Ahmedabad.
Okay.
So I think there are a number of events which are being organized in GIFT IFSC. So even IFSC also organizes number of events. So if you can follow the official handle of IFSC on LinkedIn and Twitter, you would come out to know about the events which are being organized by IFSCA. For example, we are organizing a global securities markets conclave, which are being organized by IFSC in coordination with these exchanges and clearing corporation on 16th and 17th of January in GIFT City Club. So that would be a conclave specific to the securities markets, where you can find some very prominent speakers. Even chief economic advisor is coming. You will find Mr. Ashish Chauhan and Mr. Sundar Ramamurthy from NSE and BSE, the CEOs of depositories like Nehal Vohra and Vijay Chandok, and most probably Mr. TV Mohandas Pai will also be coming with a session with our chairperson IFSC. So if you guys want to visit Gift City, I think 16th or 17th January would be a very good event. So I would share the registration link with the Mr. Sagar. So if you get the confirmation of the registration, you can attend that event also.
Sure, sir. We will please share all those details with me while circulating the presentation of this webinar. I will also share the
Registration.
upcoming program details with all the members. Okay.
Yes, yes.
Maybe now we can go ahead for the next session or maybe for the question and answers.
Shubham,
Are
ji,
there
just
some
one
more?
question.
Yes, yes.
Where do we get the list of all programs that happen at GIFT City or IFSCA on a monthly basis? Where do we get intimation about that?
So I think you will have to follow the LinkedIn handles of the entities here. So with the programs which are being organized by IFSCA, you can find it on the LinkedIn handle of IFSCA, Twitter or LinkedIn. You can follow that. So the programs organized by IFSCA you can find there. You can follow some of the entities here which are generally interested in all those things. Follow the handles of Gift City also. So I think then you will be aware of all those programs, because it depends upon the marketing which these kind of entities are doing, to whom they are targeting. So then I think you can come to know. And about, if you are just asking about the knowledge initiatives and all those things, so we guys are giving our lectures and webinars in number of institutions. So there is a certification course which is being organized by ICSI, in which I had also taken one of the sessions in November last week. So IFSC officers are taking the sessions under those programs. So I think company secretaries are registering for that. So these kind of programs are also going on, and those are also available on YouTube, I think.
Okay.
Can we register can we register on the portal of Gift City so that we are able to log in?
I don't think there is any such portal about the registration, but I think LinkedIn there would be a you can check their LinkedIn handles and all. So I think that is not private. You can see all the activities which are going on. So they are also quite active, and we are also quite active on the social media.
So details of this program that you have mentioned about 16th and 17th would be available on the LinkedIn of Gift
So I think
City.
it is going live today. The website is also going live today. We have sent the
Ah,
registration links today, only around 500 participants. So I will share the registration links with you, all of you guys also through Sagarji, so that if you want to register for that event, you can register. If you receive the confirmation, you can very well attend that event of 16th to 17th.
excellent. Excellent. Thank you.
This is in the Gift City itself, Gift City Club.
Yeah, I would
And
like to definitely attend that program.
yes, sure, sure. Any other question? Okay, so I'll take the session ahead. So this is about the Gift Connect, which we were talking about. So this Nifty 50, Nifty 50 futures and all other indices, these were being traded from SGX. International investors were trading on the SGX because now this product has come here. You can see the turnover figures, which I have just written down the right-hand side. 1 month turnover has reached up to 100 billion, and till now around 1.5 trillion dollars of turnover has been done on in a single product, which has been there. So this is about the global markets access. So I think I have spoken about the unsponsored depository receipts of US stocks on the left side. There is another model through India INX Global Access. But in this case, the trading will be happening on the global exchanges only and through the global brokers. Here, there would be an entity called India INX Global Access IFSC Limited, which is a subsidiary of India International Exchange. So that entity will be working only as an introducing broker, but you will be onboarded with the foreign brokers only. But this entity, India INX Global Access, is being regulated by IFSC. That is one of the advantage. And they also provide, I think, some economies of scale in terms of opening an account with the global brokers, etc. They can provide the exchanges to, like, I think around more than 100 exchanges in the world. So in the first step, I think in the left-hand side, the stocks are being traded on NSE-IX in terms of US stocks. On the right hand side, INXGA, they provide the access to the more than 100 of the exchanges. But in that case, your shares are not in the demat account in the GIFT IFSC. This is all about the regulations in the capital markets. So there are 3 regulations in the capital markets. MI regulations, market infrastructure institutions. These do govern our stock exchanges, clearing corporations, and depositories. The listing regulations. If you'll ask me about the listing regulations, so these listing regulations is actually a combination of SEBI ICDR, SEBI LODR, and SEBI issue and listing of non-convertible securities. So I think if you will see the ICDR, LODR, and NCS, I think the total of those regulations would be around 800 pages, 700 pages. Here, I think the combination of all these regulations you can find in the 57 pages in the IFSC. Most of the requirements are the principle based. We have not specified each and every requirement for everything. So this is something fit for purpose regulations. This is what we do say. And we have studied the best practices of Singapore, Hong Kong, US, UK while drafting those regulations so that we can make it very conducive for the capital raising platform in GIFT IFSC. And the third one is about the capital market intermediaries regulations. So these are the regulations which do govern the different intermediaries, which you had mentioned earlier about the broker dealers, clearing members, investment bankers, and all. So this is an overview of the MI regulations. So governance structure, net worth recognition requirements, and all those things are in MI regulations. So this is a kind of SEBI SEC regulations, if you guys have gone through. So this is a replacement of SEBI SEC regulations in GIFT. These are about the CMI regulations. So these are the combinations of the regulations, a number of regulations which SEBI has issued for broker dealers, members, DPs, and all. So all this combination comes out in the CMI regulations. Now about the direct listing. So this was the announcement in July 2023, which Honorable Finance Minister had made, that the companies, Indian companies, they can list their equity shares on the stock exchanges in GIFT IFSC. So this is something which was permitted for the first time. Indian companies cannot list shares outside India at this point of time. So the capital raising was always done through depository receipts. You guys have heard about the Infosys ADRs and all. So now the first time it was permitted that the Indian companies can directly list its share on the international exchange and they can raise the capital. To make this announcement operable from the legal point of view, Government of India had made some kind of amendments. So before that, I'll just go about the direct listing background and how actually it had been started. In 2018, actually, SEBI had constituted a committee, expert committee. That committee had recommended that direct listing of Indian companies should be permitted. And based on the recommendations of that committee in September 2020, amendments were made in the Companies Act Section 23(3) and 23(4). However, those amendments were commenced recently only. So because those amendments were not commenced, the listing of Indian companies were not permitted on the international exchanges. In July 23, when the Honorable Finance Minister made this announcement, these amendments were commenced in October 23. In between, IFSC had constituted a working group. So that working group had the members from various market participants, government representatives, and IFSCA, where they had worked out on the modalities of the listing of listed Indian companies. At this point of time, if you ask me, practically the listing of listed Indian companies on IFSC exchanges is not possible because there are some change which this committee had recommended and which are yet to be done by SEBI in their regulations. So we are working with SEBI on that. But the unlisted Indian companies which are not listed in the domestic market on NSE and BSE, they can list their shares on the IFSC stock exchanges. The full ecosystem along with the all regulatory enablers are available at this point of time. In January 24, the government had made the amendments in the NDI rules, foreign exchange management, non-debt instrument rules, and MC had come out with the LEAP rules, listing of equity shares in permissible jurisdiction. And that permissible jurisdiction has been only in IFSC, the 2 international exchanges in IFSC, which I had spoken about earlier. So after doing all this, we also felt that we also need to revise our regulations. So you can say that you can see that our listing regulations of 2024. Our regulations of listing were issued in 2021, but we have revamped those regulations based on the global best practices to make a very conducive environment for those issuers to raise capitals. And our new regulations have been notified in August 2024. So this is about the regulatory framework of direct listing. This is in a snapshot. You can see this direct listing scheme, which had come as a part of amendments which were made in the non-debt instrument rules. So you can see there's a schedule 11 which speaks about the direct listing scheme. So the scheme said that who can invest in those kind of companies, what kind of companies can list on the international exchange, which are the international exchanges and what are the conditions, what kind of eligibility criteria for the companies. And again, there are the MCLE rules, because under section 23 it was permitted to list. So there are some operational nitty-gritties which MC has defined in their LEAP rules. And after notification of these rules, Government of India had come out with the FAQs in which they have told that what kind of companies can list. So government is also quite committed towards to make direct listing a success in GIFT IFSC. They had also come out with the FAQs just after the notifications. So all these links I think you can find on the IFSC website. There is a specific web page for the listing under the head of markets. So you can find all this material there in just one web page. So this is about the listing that either the company can raise new capital or there could be the offer for sale by the existing shareholders or promoters. This is about a direct listing scheme because Indian companies are being permitted to list here. The intent of listing is that the foreign capital can come into the India. So all the foreign shareholders, they can actually invest in the Indian companies. So the persons who are actually residents, they cannot invest, or the companies whose beneficial owner is a resident, they cannot invest those kind of Indian companies which are being listed on the international exchanges. So this is the restriction which has been there in the NDI rules. We have requested for some of the relaxations, like for the promoters, if they want to dilute their shareholding, or if that kind of dilution is a part of some kind of restructuring. So we have requested the government to make a few amendments with respect to this permissible holder condition. So this is about the foreign investment limits. So if you see the NDI rules, FEM NDI rules, foreign exchange management, non-debt instrument rules. So these are the rules which do cover about the FPI limits and FDI limits. I think Schedule 1 and Schedule 2 of those rules are about the sectoral FDI limits and FPI limits. So if there is an investment which is coming in the Indian companies which are being listed on the IFSC exchanges, so that investment will be under the FPI and FDI limits of the FEM. In terms of pricing for the unlisted companies, those rules have said that the pricing will be through book building route only. There will not be the fixed price mechanism. So when we were drafting our listing regulations, so I've told you about the regulatory architecture. It is about the direct listing scheme, about the amendments in NDI rules. The other one was the MCLE rules, and now the listing regulations of IFSC. So we have prepared our listing regulations considering the IFSCO principles. So IFSCO is actually a standard setting body, global standard setting body, International Organization of Securities Commission. So they issue some principles that what the regulators need to follow, what the self-regulatory organizations like exchanges need to follow for drafting their regulations, what kind of practices they should adhere to, and those best practices of the jurisdictions like Singapore, UK, and all, and how we can enable the ease of doing business for those kind of issues so that they should not face the problems while coming to the GIFT IFSC. This is an overview of the listing regulation. This covers the IPOs and FPOs, secondary listing also, and also the listing of DRs and debt securities. We have also enabled the listing of some other financial products like CPs and CDs. We have also issued a circular specifically for CPs and CDs, which you can also find on our IFSC website, including the conditions for issuance of them. So this is the eligibility criteria. If you can see, I think in SEBI regulations, ICDR regulations, you find all these criteria about the eligibility. Here we have bifurcated this eligibility criteria into 3 parameters. Either the company should be able to fulfill the revenue test or the profit test. If the company is not able to fulfill either of them, they can also list by the third route of market capitalization test. If you see SEBI ICTR regulations, I think there is a regulation 6.2, where the SEBI has permitted the companies which are actually the loss-making companies, they can list their companies subject to the condition that 75% of allotment should be the QIBs, qualified institutions. Here to enable same kind of thing, we have come out with this third criteria. Even the company is a loss-making, there is not a revenue which is being fulfilled into the criteria. If the post-issue market capitalization of around 25 million, around 200 crore, that company can list here. In terms of offer document, the offer document needs to be filed with the stock exchange and IFSCA. But if the issue size is less than 50 million, around 400 crores or less, the offer document filing with IFSCA is not necessary for the observations. The company can go ahead with filing of their offer documents with the stock exchanges and the observations from stock exchanges, not from IFSCA. About the disclosures, I think this is a list of the disclosures which we have divided around 15-16 points in our regulations, very principle based. In which we have said that a summary of the offer document should be there and some major important things which are required to be disclosed in the offer document. You will not find very much details because the regulations are not prescriptive. The decision to disclose has been left to the issuer and the investment banker. The disclosure should be in such a way that the investor gets all material information about the issue, because this is how the global jurisdictions do follow. Regulator does not prescribe everything, but the issuer needs to disclose everything so that the investors can take a view about investing in the company or not. So the material disclosure should be there. Financial information should not be older than the 135 days. And if the company is being incorporated in such a jurisdiction that if they are not following the IFRS, US GAAP or Ind AS, then they'll have to reconcile their statements with the IFRS. This is the conditions which has been put. This is some other key features about the offer timings and offer period. So like you can say, I think in SEBI, the offer period is about 3 to 10 working days. Here we have kept it to 1 to 10 working days. If there is not a bigger issue, then you can keep the offer open only just for 1 month, one day also. And in terms of pricing, I think it is already there in the direct listing scheme. The book building process needs to be followed for the Indian companies, but the foreign companies, fixed price mechanism can also be followed. This is about the MPS requirement. So I think in case of India, the MPS requirements flow from the SCRM, Securities Contract Regulations rules, which actually mandate the 25% requirement. In case of large issuance, the requirement gets diluted up to the 10%. In case of foreign company, in our regulations, we had specified 10%. In case of Indian companies, the amendments have been made into the SCRR and the requirement of MPS has been kept at 10% for the Indian companies being listed on the stock exchanges in IFSC. In terms of underwriting, there is no mandatory underwriting for the issuer because it also involves cost. So again, we have kept it optional for the issuer. If they want to underwrite the issue, they can. Otherwise, they can choose to opt out to appoint an underwriter. But the adequate disclosures are to be made in the offer document. Like if you'll see the SEBI regulations, ICTR regulations, I think more than issue of rupees 200 crores, there is a requirement of appointment of a monitoring agency, which is a CRA registered with SEBI. In here we have kept the requirement of monitoring agency also an optional, but the disclosures needs to be made in the offer document. If the issuer wants to appoint a monitoring agency, well and good. If not, they need to disclose in the offer document. Similarly, for the lockup requirements, you would see that in India, there is a concept of promoter and promoters group. Here for the foreign companies, we have not kept the concept of promoters and promoters group, but for the Indian companies, the concept is there. The pre-issue shareholding of those promoters and controlling shareholders, they need to be logged in for 180 days. So that is there for unlisted companies. In case of the listed companies, the requirements of SEBI regulations will be there, which SEBI is working upon. So these are some of the advantages for the listing on the international exchanges. The companies in India, they will get access to the various investor base. And because of the global capital flow, these companies gets the visibility in the international market and valuation also gets increased. The diverse resources for the financial and financial flexibility is there. Visibility is also there because you can advertise, the investment banker can go to the global jurisdiction and can market the issue. So there are a number of advantages which are there for the issuer in terms of capital raising. Similarly, for the investors, like I told you that for the non-residents, there is no capital gains tax, there is no security transaction tax. So if your foreign clients are there who are interested to get exposure of the Indian equity, so if the listing happens in the GIFT IFSC exchanges, whenever the listing happens, they can invest in that, and there is no capital gains tax for the non-residents. and the exchanges are here open for more than 20 hours. So if there is some event happening globally, in India, the market will be open only from 9 to 3:30. Here, if there is something which is happening, they can take the advantage of the this trading window. So the events which are happening outside the market hours, benefits of that also can be taken, and the trading would be in US in foreign currency. So if those foreign investors are investing in the India, so they will have to take the currency risk. Here, because of the investment being in dollars, there is no currency risk which those investors have to bear. In terms of foreign companies, because in case of foreign company, there is no Indian company involved, so the money of the resident Indians can also flow through. It can also flow through. So, like I was telling you about the UDRs of US stocks, if the foreign companies are also being listed here, so the residents can benefit, residents can invest into those foreign companies. Even the domestic mutual funds can also participate in those kind of foreign companies. So for the foreign companies, there is access of the resident Indians as well. So like all of you know that those foreign companies, all of them want to get the access of retail investors in India, mutual funds in India, because at this point of time the market is going very well. So those kind of investors can also be targeted by foreign companies by getting listed here. And most of the potential issuers would be the holding companies of the startups. So if you will say 50% of the Indian unicorns are domiciled outside India and Singapore and all other jurisdictions. So if they can list their shares and they can take the investment from the resident Indians, also from the non-resident Indians. This is about the LODR, listing obligation and disclosure requirements. So this slide actually covers what actually the SEBI LODR is, which has been incorporated in the IFSC. So the similar information, there are some information which needs to be disclosed on immediate basis, some on quarterly basis, and some on annual basis. So this is what you can see in our regulations. All these requirements have been captured. This is a listing checklist which we have prepared at how an issuer has to come and what they can do. They just have to appoint the lead manager first. That would be the investment banker, and they have to appoint the compliance officer for the purpose of listing. Application needs to be filed for the stock exchange for the in-principle approval. That offer document and the due diligence certificate by the investment banker also needs to be filed. And then that offer document will be available on the website of the IFSC and the stock exchange and the issuer for the purpose of comments. If the issue size is less than $50 million, there will be no observation from the IFSCA. If more than that, then within 21 days, the IFSCA will issue the observations, and then post-issue report and all those things need to be filed. And within 12 months from the offer date, the issue has to be the issue has to be listed. So I think for another part of debt securities, like I told you that these regulations about ICDR, LODR, and issue and a listing of non-convertible securities. So ICDR and LODR part I have covered for the IFSC. For the debt securities, Akash will come into. Before that, Sagarji, do you want to take some questions here?
Sir, I think we'll go with the flow, and then last we'll take the question and answer.
Okay. Yes, please. So Akash is
Thank
coming
you.
into for the listing of debt security.
So as Shubham sir has completely completed the part of the equity, I'll be talking about the debt and other instruments. So debt listing is one of the items which are taken up after the fund management in the GIFT IFSC environment. The one being because it is in dollars and the foreign currency is allowed to list. So ease of raising funds by all type of issuers, alignment of listing framework basis global exchanges, the transparent and simplified listing process. Our debt instruments are cost competitive because of the listing fees. We have one of the lowest listing fees when compared to other global jurisdictions. And also because most of the investors are international in nature. So we also allowed the settlement of the securities through international clearing and settlement depositories. Additionally, we also enabled the ESG labeled bonds. So one of the main aim of GIFT IFSC jurisdiction is also that we want to become a hub of sustainable finance, because sustainable finance and ESG are the topics, and most of the foreign international investors are flowing their money and they're targeting their corpus so as to meet the green climate norms. So we also enable the listing regulations, also enable the ESG labeled bonds, like for green bonds, social bonds, sustainability bonds, and sustainability linked bonds. For that, we don't have a taxonomy as such. So we have also recognized the frameworks which are globally accepted. One is from the International Capital Market Association, ICMA principles, climate bond standards, ASEAN standards, and European Union standards. And additionally, in future, if any other standards which are globally being recognized, then the authority will take a call and will allow them. And coming to debt listing, the ESG disclosure obligation, similar to the equity, also we have green, social, and sustainability bonds. One is the pre-issue disclosures, and also an annual disclosure until the full allocation is done. And for sustainability linked bonds, we also have the pre-issue disclosures and annual disclosures. And as I told you earlier, the debt listing is one of the success stories of the GIFT IFSC jurisdiction after the funds ecosystem. Like currently, we have recently it has crossed 64 billion total debt listings, and majority of them are ESG labeled debt listings. Like recently, we have crossed the 14 billion ESG labeled debt security mark. When you compare it to Indian jurisdiction, we hardly crossed a billion mark in the Indian jurisdiction, but many of the PSUs, NBFCs, and especially the renewable energy sector companies are finding it easy to raise ESG level bonds from GIFT IFSC jurisdictions. And also, as the estimate says, that India will require over 10 trillion USD to meet its net zero emission commitment by 2017. And this is one of the jurisdictions that the corporates and the PSUs are finding alike. And also, the mix and match, the 50% of the ESG debt level securities are raised by corporates and 50% by PSUs. And in fact, the success stories of the debt listing at GIFT IFSC has been featured as case studies in the recently concluded G20 in the group called Sustainable Finance Report. A couple of issues, namely Awas Finance's limited social bond issuance, which are mapped against the SDGs, the 30 SDGs under the gender equality, decent work and economic growth, and sustainable cities and communities. And Shriram Transport Finance Company limited social bond issuance. This has been mapped against the decent work and economic growth environment and the reduced inequalities. These are being talked across the global jurisdictions, and which has given a good spotlight for GIFT IFSC. And apart from the debt securities, we also enabled in our listing regulations. One is commercial paper and certificates of deposits. When it comes to commercial papers, we have seen that globally, US, UK, and Singapore, the majority of the commercial papers are being raised. And we also want to position GIFT IFSC as the go-to jurisdiction for raising of the commercial paper. The eligible issuers being except Indian issuers, every other issuers, especially issuers based in the GIFT IFSC, can list their commercial papers. And the condition is that they have to have a compulsory demat firm and held in a recognized deposit in the IFSC or any other international central securities depository. And maturity is not less than 7 days and not more than 1 year. And currencies, any specified among the 15 specified foreign currencies. The eligible investors being the issuers may issue a CP to a person resident in India or to a person resident outside India, subject to FEMA restrictions. The person resident in India can invest via LRS route. The initial disclosure being the issuer disclosure, issue-related disclosures, and similar to other instruments, they have to have the continuous disclosures. And we also allow the buyback of CPs in full and part, prevailing market prices, and offer shall be made to all investors. And buyback offer not to be made before 30 days from the date of issuance. And coming to certificates of deposits, the eligible issuers being the IFSC banking units only, the banks which are regulated under the IFSC jurisdiction. Conditions being deposited CPs will be in demat form and held in a recognized deposit in the IFSC or any other international CSDs. Similar disclosure has to be maintained. And initially, Sagarji was asking regarding REITs and InvITs. We have allowed the listing of both REITs and InvITs, REITs being the real estate investment trust and InvITs being the infrastructure investment trust. Currently, there is an expert committee that is working on, and we are coming with a report shortly that will explain how GIFT IFSC as a jurisdiction can benefit from listing of REITs and InvITs and bring back the foreign flows towards the real estate infrastructure needs of the country. We are done with the presentation. If you have any questions, we are open for it.
Thank you, Shubham sir. Thank you, Akash sir, for taking out this session. Now we are opening up the lines for the question and answer session. So it is request to all the members who have joined for the today's session, please raise your questions, or maybe you can raise your hand so that we can take up the question one by one. If you have the question, maybe you can unmute yourself and you can ask the question, or if you're not in a position to ask the question, then maybe you can type the question in the chat box so that we can take up the question through both ways.
Hello, sir. Good evening. First, let me thank you so much from the bottom of heart. The way you explain this concept is very new to us, and we were eagerly waiting for the how you will explain, sir. Thank you so much, sir. I have a small question. As you rightly said that the investment which is done through GIFT NSC only. So, could you just brief that? What is the process? Can I apply online, register for this demat form? Dematerialization. So can
So
I open the
actually,
demat on this platform?
so what I would request that you should visit the website of NSE International Exchange, NSEIX. So I will also share the link of that website. On that website, under the product, there is a product called unsponsored depository receipts. If you will go in that, you will find the step-by-step process at whom to approach, how to open account, and how you can go ahead about this. So I can tell you there are a number of brokers which are participating in this program. I can take a few of the names like Anand Rathi. So Anand Rathi is having a subsidiary here. Then there are some other brokers also. So if you go on the NSCIX website, you can find the name of those brokers. You can contact them and you can open your bank. You can open your demat account with them. I think some of the brokers are facilitating this online facility also, like Indomoney. So Indomoney has been recently active, and I think on the app also Indomoney is providing this facility to open the demat account directly in the GIFT IFSC.
Thank you, sir. Could you just share the link, sir, so can.
So I'll just share that the website link in the chat box also, so that it becomes easy for you to go through that website. Just so in the chat, I have put the link of NSE International Exchange, and let me try if I can just put you. So I'll share the other link also where you can directly go about that global stocks thing.
Sure, sir. Thank you.
I'm also sharing in the chat box the link of our listing material, which you can find. So I think we have told you about number of regulations and all. So all these are available here, and also the number of regulations and all which are there. So all those links I'm posting it here in the chat. So if you can see, if you want to see the materials available on the IFSC website, you can see that. Any other question?
What is the
sir, maybe.
advantage of opening the demat account there? Is it that all the trades from that will not attract STT or something?
So that STT is not there on the stock exchanges here. So if you are trading
Okay.
on NSEIX, STT is not there at all. If you are a non-resident, in that case, capital gains tax is also not there. But for the residents, capital gain tax would be there. So for the residents, it would be like a income from the foreign source. So it would be taxed, but STT will not be there.
Okay, but do we have liquidity and all the most of the stocks listed there, or how is it as compared
In
to
case of
NSE
UDRs, you will get the liquidity because there is a market maker. So there
or
is a market maker.
GDRs?
So
UDRs.
UDRs, unsponsored depository receipts. So like when Indian
Okay.
companies list outside the India, then they are called as ADR or GDRs. Here, these are the DRs of the US stocks. So we are not, we
Okay.
are calling it as a depository receipt, but these are the unsponsored. These are not with the consent of the companies. There is a market maker in US who has bought these stocks and which are held with custodians here, which is divided into the depository receipts.
So anybody can open the demat account there, right?
Any resident individual, yes.
Okay. No, great. Thanks.
Sir, as you mentioned, there would not be the stamp duty also, no?
So for setting up an office here in GIFT,
Right.
I think there is a reduction of some, I think 1% or 2% stamp duty. No stamp duty, I think. I'm not very sure. I'll have to check. I think there is no stamp duty.
Sir, this FERA regulations, it is not applicable over here. FEMA.
So FEMA is applicable, but in FEMA is applicable in such a way like the entity which is being set up here is a PRO, a person resident outside India. So FEMA is applicable. It's not like FEMA is not applicable, but it is applicable like it is applicable to non-resident. So most of the regulations kind of become not applicable here.
Okay.
Hi, this is CMA Lalita speaking. I'm actually a practicing cost accountant as well as I'm a faculty at the institute. So basically, it was a real good topic that you have put forth, and this was something new to us, new to me, of course. So one thing I want to know is, like for the students who are they're pursuing their CMA, right? My own students, when they do, they are like eager to know, like after CMA, what we can do, what are the opportunities that are available. So as you told that there are many things that I've seen, SA also is a good opportunity for CMAs. So how about the examinations, or what are the things that the students, I would like to actually give the awareness to my own students, like how they can find an opportunity there. So can you just brief on such things? Yeah.
So Lalita, first of all, you should tell all your students about the Indian Cost Account Service, which I had mentioned earlier. So there are many professionals who are
Yeah,
not
yeah,
aware
yeah,
of cost accounts.
yeah.
So
I
that is the
have
first thing
told
you need
that.
to tell to them. Yes, yes.
Yeah.
So I've come from that service and you can see me here. In terms of other opportunities, first of all, I will tell you about the opportunities in IFSCA. For IFSCA, there is nothing specific for CMAs, but the recruitment comes for the grade A officer. For that, I think the eligibility criteria is post-graduation. So you have to go through the process of phase 1, phase 2 examination and then interview. Akash is the product of that examination, which you can see beside me. So Akash has cleared all those 3 stages and then Akash is here. In terms of other
Okay.
opportunities in GIFT, I think there are a number of CA firms, there are a number of law firms, there are exchanges, clearing corporations, fund management entities. Mostly the roles are available in the compliance sector. So if somebody wants to be the compliance officer, regulatory compliance, the roles are available for the professionals like chartered accountants, cost accountants, and there are the CA firms also. There are the cost accounting firms also, which are registered with IFSC as an ancillary service provider or as a BATF provider. So in those consultancy firms, the number of opportunities are there for the chartered accountants and cost accountants. The one thing is because I am in this CMA conference, you might not find the opportunities which are related to this cost accounting and all, something specific to the financial sector. You might need to know about the rules, regulations. You might need to know about the FEMA Companies Act more rather than the cost accounting. So the opportunities would be a bit different from the typical cost accounting profile.
To add to what
Yeah.
Shubham sir was saying, one additional point I would say is that currently the awareness about GIFT IFSC regulations or GIFT IFSC is very little in the market. So the students who are
Yes, yes, yes.
possessing this idea and awareness and just going to the IFSCA website and getting the overview will be much beneficial if they're aiming for a
Yeah.
job in the IFSC.
So what happens, because
Yeah.
this is
Sure,
quite
sure.
a raw market and people don't know much about this. So the role of consultancy firms becomes very important because people don't know what is the status as a non-resident,
Yes.
resident, and there are some amendments in tax, there are some amendments in Companies Act here and there. So if you can guide your students about all those things, you can provide this PPT, they can read through the IFSC website, and if they appear for the interview, it will be very beneficial for them because here the entities who are recruiting those guys, they actually have to train them because people are not aware of this. So the people who are working in
Yes.
GIFT already, if they want to switch to the
Yeah.
other entity, there is a very high demand. They get a very good hike. So if you can tell them about all those things, they will be hired very easily because people
Yeah,
don't know
sure.
those sectors.
Because there are students like who are very much interested in these financial services and stuff. But though we have introduction of about all those chapters, but where do we go for that kind of an opportunity? That's the question that they shoot out to me. So I'll really, it'll be helpful. I'll just share this presentation slide with my students too, so that they have that awareness and they do aspire for such roles. Because that's really interesting. Yeah, it was
Additionally,
really
IFSCA
interesting. Thank
website
you.
is more than sufficient to get all the readings. We also publish quarterly bulletins about the updates and what's happening
Okay.
here. And also, please ask them to
Okay,
follow our
okay.
LinkedIn and Twitter pages for more updates. And additionally, one more point is
Okay.
that the awareness is so low that companies, the more they find out about GIFT IFSC, they are eager to come and set up their companies here. So they're not finding the right people. So because of the trend,
Okay.
the people are in demand here.
Okay, okay, great, great.
Also, I
Okay,
think we are
fine. So
writing a
it's
chapter
something
in
I'll
the
explore.
CMA course. I think CMA course also, I think we are writing a chapter on gift. So I think that should also be there. I think in CS course, it has already been incorporated. For CMA also, I think we have written a chapter. So I think that should also come in the CMA course, the study also, the studies manual also.
Yep.
I
Sure.
can see one of the questions in the
Thank you, sir.
chat. I can see one of the
Thank
question
you.
is
Thanks a lot.
withholding tax applicable for a firm in IFSC as a service receiver from domestic firm, and is it applicable as a service provider to another firm within GIFT City? I think you are talking about TDS here, withholding tax, I think. So, so what actually happens is there is a notification of CBDT where this TDS has been TDS deduction has been made optional, but this is only for the entities which are availing the tax holidays of this 10 years. So the entities which are there in gift, because there is no tax on those entities. So I think CBDT has come out with a notification under certain sections where they have made this requirement as a nil rather than the tax percentage, but it is specific to some of the entities, type of entities. We have requested for few more entities, so we'll have to follow that CBDT notification for that. So it's between two forms of gift city and all, like when the service is being provided by one firm who where the tax was to be deducted, and that firm is actually availing the tax holiday. I'll share that notification also with you guys. So any more questions, or can we end the session, Sagarji, here?
Yes, we will just wait for. I'll just ask
Yes,
to
please.
all the
Please.
participants if they have any questions. So please let me know, or if you can ask your question if you have any. We will just wait for 1 minute. If not, then maybe we can go ahead with the wrap up of the today's session.
Just a small request. If you can please also share the link for this program that you have on 16th and 17th, that would be nice. So that we
So
can
we will share
register.
the registration link with all of you. We will share the registration link with all of you. The only thing
Excellent.
is that so I'll give the link to Sagaji so that they can circulate amongst the participants who have attended this webinar. The only thing is we are having the limited capacity, so we will be having the capacity of only 250 seats. So then the confirmation will be like subject to the capacity of the room. So if you receive the confirmation, you can very well attend that event.
Perfectly
Additionally,
understood.
the event will be streaming on the YouTube live both the
Right.
days. In case if you're unable to extend the invitation, you can watch it on the live.
So suppose if we apply for it, how soon we can expect confirmation or otherwise to come, because we will need to make the arrangement for travel from here to Ahmedabad.
So on Monday, I'll try to share that registration link with Sagarji. And I think by Friday, you would come to know whether the registration is being confirmed. If by Friday, I think by Friday, if you receive the confirmation, well and good. Otherwise, I think you can make the arrangements for watching it online.
Excellent. Okay. Thank you so much. Thank you. Thank you.
Okay, sure. So if we don't have any questions, then maybe we can go ahead for the wrap up of the today's session. I'd like to just mention to all the participants who have attended for the today's webinar, along with Shubham sir and along with these two participants, we were having also the Pradeep sir, but because of some time constraint and some other commitments, he is not able to join for the today's session. That is the only thing which I wanted to convey to all. Along with that, we are also having to have the Arjun Prasad sir, but he is having some commitments at finance ministry, so that's why he is not able to join for the today's session. So thank you for that. I request to all the participants that we value your feedback and your positive feedback, what your inputs, whatever things are there, that things are motivating us to have the few more sessions like this. So we hope you are thoroughly enjoyed the direct listing at GIFT City session. So your thoughts and feedback are very valuable to us, and we want to hear from you. So we have posted the link in event link in the chat box. So it will take 2 minutes to post your feedback, and that is very important for us. So I would like, with this, I would like to hand over this thing to past chairman of the Pimpri Rakodi chapter, CMA Dhananjay Vatsayan sir. So Vatsayan sir, over to you. I would request you to please close this today's session with the vote of
Thank,
thanks.
thank you, Sagar, and namaskar to all. I am Dhananjay Kumar Vatsayan, Managing Committee member of PCA chapter. I would like to convey my thanks to IFSCA officer Shubham Goyal sir and Akash ji on behalf of all participants and Pimpri Chinchwad Akodi chapter of Cost Accountants of India. Basically, GIFT City and IFSCA is a new concept for most of us, but you have presented a bird eye view in the precise manner. It was a very interesting and informative session for all of us. And I will request Sagarji to arrange some more session so that everybody can digest and understand in more detail. With this, I would also like to thank the managing committee and chairman Sagarji for arranging this session, also for making all this happen, staff of the PCA chapter. Last but not least, I would like to thank all the participants who took a quite good interest in making it a interactive session and successful. Thanks a lot and good night to all of you.